Don't like property?
I'm moving out of property.
What's your impetus for moving out of property? What's your reason?
2 reasons. One is I'm demonetizing more things into Bitcoin. And secondly, I'm getting prepared if and when I move out of Australia, which could be ultimately end up at the moment, as I've discussed, moving to Dubai.
Yeah. And so what do you think? I'd be curious to know what you think about the property sector in general in Australia going forward now.
So I used to be a mortgage broker back in my 20s.
Yeah.
And even back then, people were saying, there's a bubble coming. It's going to bust. It'll, the market will come down. It hasn't. So does the bubble, let's say, Lloyd, continue for a 40-year period?
Yeah, well, I do feel it's getting connotations of bubble now, only because there's no fundamentals attached to it. So what's happening is to some properties, they're getting tarnished with a collectible brush. It's turned into a collectible, a baseball card. Because it used to be you could buy a property and know within a reason of the cash flow it would return in rent, even resi, as to what it would dictate in return. But now it's so disconnected from fundamentals, it's effectively showcasing pieces of bubbles. Like it's just not worth what the income producing is. So if you discount cash flow back on an NPV, mathematically, it's way bubbly. However, what will probably also not happen is I can't see massive collapse, right? Because of the demand.
Well, it can't collapse because the banks can't allow it to collapse.
Well, number one, the government won't.
Government.
Number one, the government won't. Number two, the banks, they don't have a choice, but the government will bail the banks out. But also the demand is still here because of the immigration. So I don't see collapse. But what I don't see is another 50 years of let's create another spousal income. Where the fuck is that going to come from? And then we're going to go to 50-year terms? Possible. That could happen.
Well, it doesn't matter whether it's 50 years or 30 years. You could just go into.
You could keep going infinite. So we turn into a leasehold economy, right? Kind of like 99-year leases, which is what happened in parts of Europe. But I don't see interest rates going to zero again. All right. Now, hopefully, I'm pretty sure with Bitcoin, like go to zero, go to zero.
The interest rates right now are completely over the top, right? Now,
too high, too low?
Oh, too high.
Too high?
They're too high. I mean, compared to other countries.
The average over the last 100 years or so is about 4.5% at the cash rate.
Yeah, I'm comparing it to other countries. For example, UAE, you can get a loan in there for 3%,
well,
right? So why are they getting 3% and we're getting 6%?
Well, they have
hence why the banks in Australia are one of the most profitable in the world.
They're profitable, they're solid, they're steady because they don't lend on anything else. They don't lend on businesses. We're a very property-centric country. And I actually think while we were talking about arbitrage, like moving away to have a lower cost of living, but B, different tax legislation, etc. I think what's happening is people are recognizing in Australia the property addiction has caused a lot of non-productivity. So our GDP is way down per capita over the last 7 quarters, way down. We're actually in a quiet recession. And as you said, it's just pumping up so much, it's hurting business. The thing that we love the most is now hurting us the most, right? So I think there's nowhere almost for it to go. And I would actually applaud you for exiting the whole sector right now at the very, I think it's a smart decision.
Well, what's interesting though is there always has to be someone else to buy.
Always has to be exit liquidity.
Buyer,
a buyer on the other side.
Buyer. And guess what? There are.
Totally.
I mean, I brought these 2 commercial properties up.
Perfect.
They were sold within basically like 3
2
weeks.
seconds. Yeah.
Like 3 weeks. Here's a contract. Thanks very much. And guess what? At I think it was like 5% yield.
Yeah. Wow.
Right? Now that's
the commercial, right?
The commercial properties.
Yeah.
Commercial
Not bad for commercial, I suppose. I think if you're going to get into any type of property, and I've often thought that, and I know that Ben Graham told this to Warren Buffett when he was younger. He said the best type of investing is when it's most businesslike. When it's most businesslike. And so when people are going into properties like what you did with commercial, it makes so much sense because you're deriving the rental yield from the use of space from businesses, right? And you got multiple doors, so it's diversified income. And of course, you do get the value of growth in land from the demand and limited supply of land. But I think that's the most effective way of investing in property. When you start to get into resi in parts of Sydney that are collectibles because of the location, the prettiness of it, it starts to get away from fundamentals. Then you've got more connotations of bubbly stuff.
Well, there's another reason why I'm even getting out of property is because there's too much government control.
Oh, 100%.
I mean, I would never,
that'd be an understatement of the year.
ever go into resi property.
Right? You know what?
You can't
hold it, even if it's debt free. It's a tax.
It's a constant tax. Not only that, if someone wants to come in though, just on a practical level with their 3 dogs,
mate,
I can't say no. They've got to come in.
Brutal.
And, so I haven't even control over my own asset. Hey guys, just quickly, this episode is brought to you by COINSTASH, the Australian exchange I personally use to invest my SMSF into Bitcoin and crypto. Now, COINSTASH is Australia's leading SMSF crypto exchange built for investors just like you. What really sets them apart is their service and expertise. If you're looking to invest in crypto through your SMSF, they make it simple. Just book a free call with their local team and they'll walk you through the entire process. From setting up your crypto SMSF account to helping you stay compliant with Australian regulations, their experts guide you every step of the way. You'll get fast onboarding, dedicated support wherever you need it. You might be investing in digital assets, but with COINSTASH, you're dealing with real people and that makes all the difference. So if you're ready to take control of your crypto super and make your SMSF crypto journey smooth sailing, hit the link in the show notes and book a free call with the COINSTASH team today. Now, back to the episode.
Even when people say, oh, property is a good hedge against inflation, now is a good hedge when you've got debt over it because the debt over time reduces with the inflationary pressures. However, the operating costs are inflationary too. So like all of a sudden, the property management's more. And all of a sudden,
the insurance,
the body corporate, blah, blah. So now, like if I bought, so to our earlier point, I do rent because if I was to buy where we live, and we live in a nice apartment, but if I was to buy that, I'm 300 in the hole from the start a week just in body corporate fees. Like, why would I even buy it? Like, why?
Yeah.
You know what I mean? So I agree.
Which is interesting.
It's less interesting
because
right?
that's why you're such an interesting case.
Yeah,
because
sure.
you are against the grain.
Totally.
Yeah. You and people would look at you and say, "Wow, you're a multi-millionaire renting."
Yes. I had a guy
Tell
once,
us more.
I had a guy once in an event. I was doing an event, and I said that. He goes, "How much rent do you pay?" And I told him, he's just the soul left
How
his
much
body.
rent do you pay?
$850 a week
Oh, that's reasonable.
on the river.
Wow.
Been there for 13 years.
Brisbane
though.
River?
No, Gold Coast, Rangiora River.
Oh, right.
Main river. I often joke we have $6 million views because the houses across the way are $6 million each.
How do you go?
And they have views of us.
What about the view tax that's on the Gold Coast?
Well, you could say it doesn't impact us because we don't own, but then you don't know whether the landlord's going to pass on the rental
later.
rate. So, but one of the things I've noticed is because we run businesses from that too, we have a segment of that we can deduct from home-based business expense on the rental. We don't have to factor in the body corporate fees. I don't have to do any sinking fund upkeep special levies that happen in units, and I don't have to worry about actual view tax hitting me. I can just, perhaps if it gets too hard in my stride, I can look elsewhere. So what I love and what I find a great asset is optionality. And you're right, like a lot of people don't have the skills or the decision or the nous or the desire to look for places to deploy capital to get high rates of return, but I like the game. And I think that's why I have realized that, I'd much prefer to scale a business and make, 1,000% ROI than
this comes back to sort of part of the argument before, which is why you're so skilled in this sector. The average person in the street does not have the same skills, smarts to go and do the research and what have you that you do.
Or the
desire. Yeah, or the desire, right?
Sure.
And that's why superannuation is just so easy for people. Money just goes.
Well, they don't even know what it is.
Worry about it and just.
If you ask some regular person what's superannuation, they think it's a soup of money that just starts trickling to them when they hit 65. That's what they think it is.
And the mistake that they've made is that they think that it's going to somehow allow them a decent lifestyle. I'm going to go on holidays every year to France and Italy and what have you. And the fact of the matter is, even the industry super funds say, on a comfortable lifestyle, you'll be able to go on a holiday once every 7 years internationally. Right. So basically by the time you get 65, by the time you're 80, you're probably like one holiday maybe.
Yeah.
That's what you're affording.
Yeah. The challenge with that too is because super funds charge a 1 to 1.5% fee every year, you're just getting destroyed by the fees. And some of them go okay in terms of returns. Some can get 10% a year in the last 5-10 years, but many can't because they're poorly managed.
But is even 10% or meeting the hurdle rate?
Well,
I've seen reports of the hurdle rate really being closer to upwards of 15%.
Well, no one's going to get 15% compounded annually every single year for a long period of time. Like Warren's at 19, and he's the best ever existed.
That's what you've got to meet, though. Otherwise, you're essentially going backwards.
Well, perhaps if we added in the pernicious inflation of 8 to 9% that happened in the last couple of years, I'd agree. I don't think it's going to continue like that. But irrespective, if the super fund buys businesses like Apple, like Gillette, like Coke, like Google, like all these companies that have pricing power, meaning that inflation goes up, they just go up. That's why, like, if you had a Big Mac index, you can
or
have
a Whopper
or a Whopper index, and I call it the Maxibon index here. It's like anything you're pricing off fiat is going to grow, isn't it? Because the inflation wipes, like it makes it more valuable inherently. But we know Big Macs don't actually grow. They've actually shrunk.
But then the problem is now is bracket creep.
Totally. Yeah, bracket creep's huge too, and that's a
the
government's
policy,
you
right? Just got paid more money. I actually just paid more in tax.
Yeah, and it really lends itself to why in my circle of friends, I've never had more conversations. That's like even when we walked in here this morning, the first conversation we had was like,
when you're leaving.
What's the point? Yeah, outside of, like I said to you, of family being here for me and my wife Alicia, we've discussed it, and I can't remember a time in my life when more people in my circle have actually said I'm leaving. Like, and also where I've actually, that made absolute sense. You know what I mean? Like, so I think what's happening.
Well, there's records amount of people leaving.
Yeah, and so what's happening is the Western developed worlds are importing undeveloped people, and they're leaving the country to the developed world. So it's this massive flip of what's happening,
Absolutely.
right? Like, whoosh. And so all of a sudden you're getting a lot of digital nomads living in Vietnam because pound for pound, probably in Da Nang, it's the cheapest place to live.
Well, people are moving to where their money is treated best.
Well, certainly less tax and cost of living, right? And more value. So like, when you go to a restaurant now in Australia, like I went to a restaurant the other day and it was like I was doing them a favor, Ben. Like, I'm doing you. Like, can I have a beer? No, smile, no give a shit. They're just being spoiled.
No, I totally agree with you. I had this same conversation, and when the waitress came over and sort of dished out and didn't greet or anything, I looked at my wife and I said,
"We're leaving.
No,
we're leaving the country."
I just said, "Babe, we understand because that's the best you can get. You need a body." So we had to grade her based on the fact that actually she gave us menus. Okay, tick.
Yeah, that's good. Instead of a QR code. Yeah, I know. Yeah, so I've really contemplated it.
Because you've got an online business.
Yeah, we could
So
easily
you could pack
move
up and go.
easily. And again, I used to live in Dubai, so it's nothing new. It's just we have had the discussion though, like where would we move to? So like,
where would you move to?
it's a good question. We haven't really nailed it because again, what's stopping us is family. Because I think to myself too, like I'm happy to pay the extra gazillions in tax because I value the love of my family and time with them more than money.
Okay,
right?
but when does it get to the point where you say enough is enough? And it
I
may not
don't
be
think you
tax.
put a
It may
price
not
on
be
it.
tax. It could be digital ID.
Well, I think that type of poisoning would drive me more than money. So like, for example, I'm happy to lose millions in tax because extra money's not going to make me happier, right? So I'm going to like, well, I'm happy to be here. But what you said before, if my freedoms, which is my highest value, obviously that's why I'm in business, is compromised, man, I think half the population would leave, right? Well certainly everyone on X.
That's basically...
Those Australians who live on X,
Yeah,
they would
that's
leave.
basically, Lloyd, where I see things going. Hey, thanks for tuning into Crypto Collective. If you enjoyed this video, the best way to show your support is to subscribe to the channel, or if you're listening on Spotify, leave a 5-star review. It really helps me to create more content just for you. Also, if you're ready to level up your crypto journey, make sure to check out COINSTASH. It's the platform that I trust to buy, sell, and hold crypto with ease. You can also find more of me at I'm Matthew Fraser on all social media platforms. Take care.